Dipan Mehta of Elixir Equities joins us on the show. Hi Dipan, good afternoon. A lot of earnings from the broader markets coming by. We spoke to the management of... Good afternoon. Radico, Khaitan, PVR just came out with the numbers. Westlife has posted good same-store sales growth. What are you making of these earnings?
No, I haven't seen these earnings so closely. They've just come out a few minutes ago, so wouldn't want to comment without going much deeper into them. But by and large, I think earnings have been in line with what Street has been expecting. And also, I think management commentary is positive. I haven't heard many negative, comments coming in. And although there is a certain pressure on account of recessionary trends in the economy, most managements are hopeful that maybe in a couple of quarters or so, they should be starting to get back to their earlier growth trajectory. And I think Street also is liking the earnings season so far. We have seen the breadth of the market improve significantly. And intuitively, I can say that on announcement of results, we have seen far more stocks rallying on declaration of results than showing a correction. So I think we are seeing a complete kind of a build-up taking place and looks to be like the revival of the bull market, which we had seen maybe a couple of years ago or so. And only disappointing aspect is the volumes, which I think will eventually get corrected. But by and large, I think it's shaping out to be a good earnings season so far. And one needs to keep in mind that the bad news does tend to come towards the end. But whatever we have seen so far, I think it is supportive.
Right. So where are you placing your bets, Dipan? I mean, with regards to the earnings momentum in 2020, we've also got, aside from that, even from the financial space, we've got commentary from, Rajneesh Kumar at Davos talking about this being the best year for recoveries. Do you feel that it's a good time to be positioned in all of these names?
I think so. I think we're very positive on the financials and not only just the banks but also the NBFCs, especially the ones which have survived the kind of crisis which was there in the credit markets. And whichever NBFCs have survived, I think they will be on track to gain market share, to grow stronger. A lot of their funding issues are gradually getting resolved. And I think that once we see revival in key markets for them, that being say auto or real estate, you will see significant improvement in the credit growth as well. So a lot of the financials depend upon the real economy for their growth rates, and that I think is a bit of disappointment at this point of time. But in terms of the question marks that we had about their solvency and about whether they will be able to survive and maintain their business model intact, I think those questions have been answered in the last couple of quarters or so. And as I said, I think strong NBFCs, stronger banks, which have been able to deal with the NPA problems, and more or less most of them have already provided for it, I think they can look forward to good times going ahead. So very positive on the bank NBFC sector. And then I think on the consumption side, we're looking out for better trends, if not actual results, from some of the Indian FMCG companies which have lagged the overall FMCG market, like say a Godrej Consumer or a Imami, or a Jyoti Laboratories, maybe even a Britannia. So where I think we have seen laggards in the FMCG space for whatever reason, could be rural demand, could be product specific issues, I think those should see a gradual turnaround from this quarter onwards. So I think these are two buckets which we're looking out for, and looking out for good results to come through. And then there are some stray special situation type of companies, which could be in appliances or could be in e-commerce or something like that.
Dipan, what's your take on housing finance and the recovery happening out there? Because we've heard a lot of positive commentary coming in from, banking honchos talking about the housing finance space no longer being an issue. It's going to become a non-issue going forward, and it's only going to pick up. And even in the results of some of the others, like a Motilal Oswal Financial Services, the housing finance segment actually was the bigger kicker for the earnings.
Yeah, I think housing finance companies are poised to make a comeback. What we saw, the numbers coming from Canfin Homes and even Motilal Oswal, clearly shows that there's a revival in the housing finance companies. And those HFCs which are focused on pure retail loans, I think they are completely out of the woods. and they will see significant credit growth as well. And by and large, they don't have an NPA issue. It was just that overall slowdown in, say, affordable housing or some of their own internal issues with regards to raising of resources was what was holding them back. But now a lot of those have got addressed. I think that credit is flowing far more smoothly to the HFCs, to the NBFCs, and the rates at which they're getting the credit also are quite attractive. They are slightly higher than prior to the ILFS crisis, but nonetheless I think they are still sustainable. So very positive on the HFC side, and what we like best about HFC is the valuation wise they are available very attractive valuations. The standalone HFCs, the likes of say LIC Housing or PNB or Repco Home Finance or Canfin Homes, I think they are available at very reasonable valuations, and these are businesses which can easily compound over 5-10 years or so, given the kind of demand that is there for housing and housing finance.
Dipan, just one final question. I know you didn't look at these numbers closely, but I'm still sounding it off. Westlife developers came out with the same store sales growth of 9.5%. Now, with the current inflation metrics that they are, would you be happy with these numbers? The market seems to be happy with the internals because the reported numbers and the bottom line has also multiplied, as a result of which the stock is up some 12-13%. But same store sales growth of 9.5%, how do you read into that?
I think it's certainly positive, and Westlife has made great progress over the last 3-4 quarters or so. They have revamped their restaurants, and I think the new menu and the kind of coffee bar which they have set up is giving them good traction. And as against the Jubilant Foodworks, if you compare that, Westlife has got more scope to increase its network so far. So from that point of view, from a growth perspective, maybe Westlife may do better. But then I think valuation wise, Westlife is far more expensive. But by and large, I think the quick service restaurants have been doing well. But it's just that want to be a bit cautious in this segment, given the kind of disruption taking place as far as food aggregators and food delivery companies are concerned. And especially in the case of Jubilant Foodworks, I think a lot of these sales which were taking place through delivery would certainly get impacted by the presence of the likes of Zomato and Swiggy. Maybe not so much for Westlife, but I think that's one complication which is coming into the QSR. And also these companies are not cheap in terms of valuation on any parameter that you compare them to. No doubt, I think they have got good potential, but you want to buy good businesses at reasonable valuation and not at outlandish PE multiples.
That's true. Okay, Dipan, we'll leave it at that. Thanks so much for taking the time out and speaking to us today at BloombergQuint and giving us your thoughts. Appreciate your time.